Well, good afternoon, investors. Welcome to our November 4th. It's actually election day in many places around the country, this edition of Bull Sessions. My name is Mark Robertson. I am joined by my dear colleague, that mathematician from mid-Michigan, Ken Kavula. Good afternoon,
Hi, guys. Ken. How's everybody doing? We've been meeting quite frequently here. Saturday, Monday, today, we're making it a daily thing here. We've got to watch that.
We have. We've turned into a commune all of a sudden, but those days come to an end. It seems like every year as Thanksgiving approaches and the holidays, then we get a little more scarce. And that is, I don't know how many shopping days there are left till Christmas. Maybe somebody that's in attendance can let me know. But that is also a consideration. But welcome, everybody. We are decompressing from our weekend with our best small companies. And I don't know about you, Ken, but every year I just have this feeling that if we'd have just looked a little, turned over a few more rocks, you know, you run out of time.
Mark, when I run out of money in the family club, I'm still getting that feeling all the time that if I just look a little bit harder, I'm going to be able to make my portfolio a little bit better. And I have to resist that urge. I think that asymptote idea where you get closer and closer but never quite get there. I think that investing is asymptotic.
I think you're absolutely right. And then it also goes back to my days on the editorial staff at Better Investing. Thank God for deadlines. Because at some point you just got to, put it out there and move on to the next one. And that's certainly part of my heritage. By the way, the picture on the screen, for those of you that are wondering, that's not a groundhog. And it's not anything else other than a beaver. And we're celebrating the beaver moon, which I believe is officially tomorrow night, but it is the brightest and largest moon of the year. So Ken was saying that he actually woke up with it glaring down on him this morning.
No, I didn't say that.
Well, you sort of
said it was all over my computer when I got down to my computer this morning.
That was glaring from you from your computer and your phone.
Yeah, there it goes. Okay.
Frankly, I'd never heard of it either, and it's all over the social media, so whatever. We're also going to spend just a few minutes talking about the series that we had done in the past on our favorite investing books, so we will spend a few moments with that. We do have a nuclear audible for the best small companies that we're going to cover, and hopefully Betsy will be okay with that. And then just a quick update on the utility bill auto pay, so let's go ahead and get underway. Just real quickly, we learned on Saturday morning that a group of rabbits is known as a fluffle. And I think that came to us courtesy of George Mackey from Houston. So thank you, George. We've added a word to our vocabulary, and I especially like that they recognized Canada in the definition, because I don't know about you guys out there, but Ken and I have a fondness for the Canadians. We live north of them. So it's always good to see Canada referenced pretty well. We closed out good results on Saturday morning. Many of you were there with us, so some of this will be a slight repeat. We will buzz through the best small company stuff. But, Ken, I think we can raise a glass to the results from 2025 finally. Start working on the next batch.
Well, I was very pleased with the way 2025 worked out, so I am playing with my screen, Mark, and trying to get it to fit my computer. Somehow I ended up with a screen that was about twice as big as the screen itself. The slide was not fitting on, but I've made it happen now. So
are you healthy now?
I'm now re-engaged, okay?
You have conquered technology?
Yes, I have, okay.
All right, very quickly, our disclaimer, no investment recommendations intended. We will be talking about real companies in real time, but this is entirely about education and the demonstration of a philosophy, a method, a technique, a group effort that goes back nearly 8 decades. Do your own homework, make your own decisions about individual investment opportunities or the tools that you use to help you with those decisions. I was doing some of that this morning myself. making some of those decisions. So make those decisions, do your own homework. If you have follow-up suggestions for future topics, we are going to cover some mailbag type stuff next week, along with the buttonwood. We'll get to that in a minute. But send us your suggestions if you have questions or if you'd like copies of the slides. We do post the slides in the manifest forum in the general discussion area, so you can always retrieve them from bull sessions. And of course, the bull sessions threads actually show up as a featured thing on the homepage continuously, so you can access it there also. Those are our 2 email addresses on the screen. Anything else you'd like to add, Ken?
No, except that, Mark, I was carrying on a conversation during last night's program with one of the guys in my own investment club, and we both were wondering, do you have control over the dashboards that are displayed on the front screen of the manifest homepage?
No, theoretically, yes.
Over on the right? Well, we were just wondering, maybe a dashboard that has immediate interest, like the small company dashboard, maybe it could be listed over there on the right instead of having to hit more and then look for it on the list. I just was making that suggestion, and it wasn't really my suggestion. It was Don's suggestion from my investment club.
All right. Are you really going to shake this bag until a cat drops out of it? And okay. We are working diligently, and Kurt has already got the rough draft of a website refresher and enhancement. In the past, what you just described was always difficult to do because it involved going back in and actually doing some hard coding. And what Kurt is doing this time around is many things like we're about to talk about. But yeah, we do want to make that type of thing possible, that we can adjust that content more.
That would be really very nice. Very nice.
So
yeah.
Now when he sees me tomorrow, he's going to kick me in and probably toss me in the creek. But anyhow, that is a work in progress, and that's not the only thing he's working on. I can't wait to spend a few minutes with him and kind of crank that along. All right, for those of you that are Portillo's fans out there, you could have bought it today for $4.50
I think you should make the sad hot dog picture much larger, Mark. Okay.
On the fly, we will do as the master. Should I just use it to cover up the price, maybe?
That might be a good thing to do. There we go. Put it right over there in the corner. Yeah.
Yeah, he's pretty sad today. There's no doubt about it. It's not traumatic. It's not an apocalypse or anything like that. At least I hope not. I do have a few shares of this for fun, but you can see on the lower left that their operating results were a bit lukewarm. Not even sure what adjective to throw at it. But I've got to go ahead, Ken.
Weak. That's all I was saying.
But, when you're talking about an opportunity for a turnaround, these guys did good stuff. And I just love the fact that they recognize that their restaurants are designed to ignite the senses and create a memorable dining experience. Now, Ken, you've been to Portillo's on the west side of Chicago. Did it ignite your senses and create a memorable dining experience?
Well, I now know what a Chicago hot dog looks and tastes like. So that was a positive experience. Okay. I'm not completely convinced I want another one, but I now know what it looks like and tastes like. So that was interesting. I think I'm going to try one of those beef sandwiches the next time we go, however. We maybe should stop there on our way in April. When we go back to Chicago for the convention in April, we should stop there again. Okay.
I will tell you that I have at least a half dozen RSVPs, including people like Pat Donnelly and others that would like to go there with us. So we'll do that. Anyhow, pressing on. Like we said, the stock market today has been pretty turbulent and kind of prices all over the place. And this article came out. I did not scroll down to the punchline, so maybe his story changes by the time he gets to the bottom of the page. But Mark Hulbert basically writing that the market is perhaps even dramatically overpriced and bubble sensitive, at risk of being a bubble. And then this, I thought this graphic was pretty cool, Ken. You had talked about having a concern that at some point you do reach one of those past incidents in the past. And what are your thoughts, just from 35,000 feet?
It depends on which expert you're listening to on the talking heads or wherever you're doing your listening. But I think that these corrections that are supposed to occur every 3 or 4 months to keep the market, relatively stable in an upward direction. We haven't had a serious one except for Liberation Day. We haven't had a serious one in a long, long time. And every single book that you read, every single person that you admire tells you that these are good for the market, not bad. So I'm going to try to keep as positive about today as I possibly can be. And if it continues for the next week or 2 weeks or a month or 2 months, I'm going to just try to stay positive about it. I like all those slides that we did during Liberation Day period last April and early May, when we kept telling people, don't panic, don't panic, don't panic. So I'm going to try not to panic.
Well, I'll tell you, I celebrated the shock and awe of what was happening mid-morning. I actually went out, so I don't have to repeat this too many times. I went out, and in one of my retirement accounts, I bought all 20 of our best small companies. And I got them at much better prices than they were a couple days ago. So I
not all of them.
They're not all of them. A couple of them are actually quite interesting what they've been doing already. But yeah, there's a silver lining in this stuff, and it's not bluster for sure. Any thoughts, Kim or Matt? How do you feel about in general about the market?
I'm having a great day today. Some things are down. Some things are down, but I'm all my eggs in that one particular basket are fine.
I saw Vital Farms is
that I was going to say, is that code for Vital Farms, Matt? Is that what that is?
It's going to be the pun company, and I'll say, so they're up 15% now, 16%.
Yeah.
Which only puts them where they were back in July when I first was interested in them. So more importantly, particularly for Joanne, who asked just before we came live, everything's good. Everything's on track. They got through their ERP launch fine, which we know from Lamb Weston can really be a problem for any company. But I just sincerely hope that they update their long-term guidance at their Investor Day, December 16th. That's the next D-Day.
Absolutely.
Well, we want to hold on for the roundtable selection from last week, Tuesday, a week ago, because UFPT, at least the last time I looked, was really on a tear today, and that was something. Yep. I've had a resolution, Mark, that anytime I have a high conviction about a stock that I'm going to present, that I'm going to buy at least $1,000 of it. So I did buy a little bit of UFPT Wednesday morning last week. So I'm participating in the melt up for that particular stock right now.
Absolutely. Kim, any thoughts, or did Kim have to step away? She warned me she might have to.
Kim is here and de-stressing from family issues, so I haven't even looked at the market.
Okay. Yeah,
it's probably the best thing to do, Kim. Best thing to do, yeah.
That, and let's say a few peanut M&Ms are helping.
Well,
one needs to cope the way one needs to cope.
Well, that leads us into our weekly assessment of this situation, and I fail to see the market as tremendously overvalued. Yeah, there's pockets that probably need a correction, but when you've got things cooking along at a 9 to 10% return forecast, I have a hard time seeing any huge vulnerability. One of the things I thought might be interesting to do is kind of go back and look and see what the conditions were like back in 2008, 2009, maybe spend a moment back then, but I don't know. I'm not even too wild about that. So Ken, what are your thoughts?
I'm just happy again, Mark, that we're somewhere near that line of expected return. The market, from my point of view, if I'm looking at all the stocks that exist, things are maybe a little bit below average right now as far as returns concerned, but we've always been telling people 9 to 11%, and that 9.3 prove is kind of bearing that out. I mean, that's value line at 8.8. That's my par at 8.4. Those are clustered pretty closely. The total return from the value line universe at 10, right smack dab on that 10 number. So I just don't see enough to panic about right now. I do understand that there's a couple of stocks that have PEs that are astronomical, and maybe the rule should be don't invest in those. All right.
Well, and some of the members of our community, including several people that are here this afternoon, are our ARDX advocates. And we had a really fun day on Friday. This morning, not so much. I think we gave back all of that and then took half of it back again. So you can do the math. It's been rough. And of course, the giddy check on Portillo's didn't go very well this morning. So I guess now I'm officially in a bad mood.
Are you having fun yet? Keep going.
I am. Someday I'll tell you some of my adventures from this morning. All right. Here's the performance perspective, talking about long-term perspective. Again, no major changes here. We are going to talk about the best small companies for both last year and the trailing 10 or 11 years, which have worked out pretty well. Many of you were with us on Saturday morning. We are going to highlight a little bit about the Russell 2000 Growth Exchange Traded Fund. That VTWG, by the way, is moving up gently up the list. So maybe some of our smaller, faster growing, promising companies are getting ready to get healthier.
I'm happy to see the roundtable poke its head above 2 again, so that's good.
Yeah, I think, depending on when you look at our ARDX, wow. I did note that the S&P 500 ratcheted up a little bit ahead of Home Depot there, but it looks like it changed. I forgot to sort it back. Never mind.
Never mind. All right.
It was there for a few minutes anyhow. All right, so let's go ahead and press on. Here's our Groundhog Challenge. The most important thing, I am still scrambling to be on the list, but everybody remember me well. Remember me fondly, because I have a feeling that number 48 is going to disappear. Where are you at these days, Ken? I know you're on here. You were creeping.
I'm at 23. I moved in the good direction, up 6 places since last week. And this is one of the things I told myself when you sent me the deck, Mark, that I could lose half of my gains in this whole portfolio and still be doing plus 25%. So I'm happy with 25%. At the bottom of this list, you'd still be doing almost 20%. So that's a good year. It's just not as good as it is or as it was last Friday. That's all.
Yeah, and what's kind of fascinating to me is, well, first of all, there's a reminder. We're 3 months away from the end of the Groundhog Challenge, so hence the calendar entry down there. But the clubs are bubbling, and not in the bubbling way we were talking about a few minutes ago. They're bubbling up again. That's an average number of clubs, and they're just kind of drifting up the list again. I don't know, this must be the type of market that favors that.
Well, we haven't had. I've started to keep a list of the clubs in the top 50 as well as the clubs in the top 40, Mark, and we haven't had 10 clubs in the top 50 now for the last month. So this is the first time we're back to 10 clubs in the top 50 in the contest.
Good stuff. And of course, Motivated Investors continues up there in the top 10. We do have to do a shout out. Sandy Castor up from 15 to 8. And She's also on the ARDX bandwagon with some of her picks. Those ladies out of Janesville and St. Louis continue to percolate along. Bill Griffith up from 10th to 6th, but there actually were very few moving up. That entry at number 21 is probably going to have to chart this and talk about it. I mean, we talk about how leveraged options are. They were smack dab in last place within a few weeks of Liberation Day, and they were deeply in last place. And look at how much recovery there's been, and that's a long-term option. It expires out in 2027, so a subject we can talk about without getting people too riled up.
Well, and we usually kind of pick on the ones that make big moves, Mark, but the fact remains that the top 20 have stayed pretty consistent for the last 2 months now. I mean, they've traded places, they've moved around. Every now and then one moves off and the new one moves on. But especially the top 15 have stayed extremely consistent over the last 2, almost 3 months now. So, and that's still true.
And we've got some of our community fairs. There's Betsy at 25. Don't want to single too many people out, but Robin and Marie helped us a lot with the best small companies over the years, and just a whole lot of familiar names. I smile every time I go down this list thinking about all of you. I hope as many of you as possible will come to the convention in Chicago in April. All right, anything else here, Ken?
We should promise them a picture of all the groundhogs,
We
Mark.
should get a big groundhog picture. Good idea.
We should get a big groundhog picture at convention, yeah.
Okay, we'll try to work on that. We'll get our ringleader, Kevin Galogli, to handle that mission. All right, let's go ahead and press on. Just a few moments with Buttonwood Bulls. We will actually take a look at that portfolio next week, probably make a decision or two. And yeah, it's taking a breather. It had a pretty good run for a few months and it taken a bit of a breather in the overall portfolio. Our $100 for November has landed, Ken, so we've got a little cash. And just need to take care of it and keep that blue and green bar going in the right direction. Here's a look at the portfolio. Again, not going to talk about it too much today other than to point out that UFPT is up a bunch.
Just one comment, Mark. How can an 8% grower have a 20% par? I'm beginning to question some of the arithmetic. So I want to maybe do a little bit of a dive into that and talk about it.
Talking about Gentex?
I'm talking about Gentex.
Yeah, well, it can happen. You can get that.
Oh, I know it can. But I'm wondering how much patience we have. So.
Well, you have to be dealing with a specific case where PE expansion and generally profitability or margin enhancement is reasonable to get to that.
Understood.
Sure, we could turn that into a bit of a case study. But other than that, from top to bottom, there have been some pretty good performers on this list. United Therapeutics had a really strong week. I think they are up. Bought some earlier today. So
yeah, this price does not reflect the update that it's having, or it was having before we got on the air here. The other number that either is going to have to be adjusted or might be adjusted today in stock price is that number 2 on the list, the second biggest holding, Google, with par that has moved down now below money market. And I think we're going to have a moment of silence as to do some deep thinking about what do you do when Google's 11.5% of your portfolio with a par of 3.4,
Yeah, and that falls into the discussion of it's a double-digit growth company.
Yep.
The analysts are only now catching up. I believe when we're in the middle of issue 13 and issue 1 for the value line data update, and I think Google probably gets a little bit of a boost from the analysts. So we'll see. We'll see a week. It'll be updated for sure between now and next Tuesday.
Great.
All right, let's press on. Again, this is our cover slide from Saturday morning's presentation. Ken and I are locked into those uniforms. They worked out pretty well for us a couple years ago, so we're kind of keeping them on as a good luck charm. And plus, I just love to keep a costume on Ken. And pretty good results for 2025, pretty good expectations for 2026. We could be wrong, but we chose the buzzwords down at the bottom: persistent, reasonable, assertive beliefs as what we feel we can learn from an effort that is now 20 years old, by the way. And it's actually more than that if you go back into the community days before 2006. But here's a look at our results. We did come in at 36.4 for the end of the year. So Ken allows me to talk about this now. In fact, he encourages me to talk about it now. So good results for the end of the year. He's really a superstitious guy, so he won't let me talk too much about 2026, but 2025 worked out. And again, you guys all know the story, so I'm not going to go too deeply into it. Forbes abandoned us back in 2014, started chasing unicorns. And Ken, I'll let you finish the story.
Well, we said we can do just as well with a smaller list, and we decided to put a list together of 15, 20, 25 stocks. We never really have codified how many are going to be on the list. We've been using 20 recently. But this last year, the red bar is much, much bigger than the blue bar. And that's the goal of the whole thing, to make it happen. So what is this? 9 out of 11 for that period of time? Is that what it
made
is?
That change? Yeah, I mean, it was really, we literally were sitting down, over breakfast or coffee or whatever, and said, you know what? Why don't we just pick them like investment clubs do?
Absolutely.
I mean, duh. And expect the quality and consistency from your small companies. So good stuff. We don't need to go over this in any great detail with the audience. You can go over this if these are new to you. You can go over it, get the slide deck, and go over it. But this is the general characteristics that we seek for the companies.
I think the important point to make is at the very bottom of the slide, Mark, that in a group of 20 stocks, we're completely comfortable with 3 or 4 non-core positions, because that means that 80% plus of our positions are core. And that means they're good, solid companies, maybe not with quite as much history as we would like to have. After all, a lot of smaller companies have only been around for 2 or 3 or 4 years, but we're depending on quality. We're validating our par numbers with prove, and we're looking for a combination of all those things to be true for the vast majority of the stocks in the list.
Yeah, and I think we should emphasize that we probably doubled down on the return forecast. Let's face it, we're here for the return forecast. We want to generate superior returns. That doesn't mean we're going to compromise anything else, but as we went through the list this year and pared down the candidates, we were very concerned about their projected return that you would find from a SSG-based stock study or the prove, and that became an area of emphasis, along with some stability and persistence in the sales track record for the last few years. So you'll see that as we've got a slide that covers that. All right, just a quick reminder again, with this audience here today, you've seen this so many times. Only changes here, we yellowed in the dates that are not 10 years. Everything else is a 10-year look back. But the important message to take away, use this on any investment club members that are reluctant to go after the faster growing companies.
Mark, is there a reason for a yellow in that total return column?
Just to remind me that Y charts abandoned me and I have to do those manually. Okay.
All right. So it's a reminder to you. Okay.
Yeah. And I just leave it there because if I don't, I'll forget.
Okay.
So that's why. So that's one of the reasons we're abandoning Y charts. Yeah. So these are the 19 institutional funds, whether they're mutual or exchange traded funds, that have beaten the market by more than 5% over the periods shown. There's only 19 of them. And the other common characteristics they have is a fairly healthy amount of growth in their forecast. So it's just a quick reminder of that the importance and the strategic importance of that. So just a quick slide showing you where we get a lot of our ideas. Some of our favorite ideas come from those faces along that top line for sure. Thank you. We can't thank you enough for the number of times that you have nudged us in the direction of a really cool small company opportunity. So thank you. What would you like to add to this, Ken?
Nothing.
Nothing. You just want to say thank you, huh?
I just want to say thank you to everybody. This is truly becoming a community exercise. The number of ideas that are generated from all over the country and coming from all kinds of source material and from personalities is amazing. I think back to when just two guys were doing this job to start with, and now we maybe have 200 guys, male and female guys that are doing it. So we're very pleased.
Yeah, we're kind of back to the old social media days before it was social media at Better Investing. And if you're out there and you thought that the Cowboy State Daily newspaper was going to be your source of ideas of small companies, you're a very special person. Thank you, Betsy. So good stuff. And we had, as you know, we had swept Forbes and Fortune kind of into the doghouse and perhaps even under the bus, but they are going to come out with something. Fortune did mid-October. They handed in their homework late, so it wasn't as influential as it's been in the past, but we will be looking over those. The hunt for small companies doesn't have to end with Halloween. The January effect is still real. So you want to remain cognizant of those small company opportunities, and I think both of those lists are probably worth continuing to perhaps use in a segment of bull sessions here over the next few weeks.
And we're already looking at sources that aren't on this slide. Mark discovered a source through a friend of the groundhog, and the list was pretty darn good.
Yeah,
one of my favorite expressions, Mark, is the dustbin of history. And that's, I think, where we were going to put Forbes and Fortune in the dustbin of history. We're going to retrieve them and shake off the dust a little bit and see how some of their lists do.
Yeah. They might survive. The publication that Ken is referring to, we'll actually cover it next week. I didn't have time to throw it into this week. I think it was called Upstart. And it's a publication of the old dot theory people out of Hammond, Indiana. And it was quite a good list from Jeannie Robeson over at Heart of Illinois. And
Mark, did you or Ken, either one, get the Fortune list yet?
Nobody's mailed it to me, Kim, so I don't have.
Yeah, we're still,
okay,
we're hoping to see it.
Be going for a drive this afternoon because there's a big bookstore nearby, and I thought I'd see if they still have any of the Fortune magazines out.
Thank you. Yeah, anybody listening on it, let us know.
I just counted, Mark, and I have added 14 new ideas to my ideas list from that one source. So some of them I knew about. I just didn't. I just haven't looked at them in a long time. So I'm very pleased to bring them back up to the top of my understanding and to the front of my mind and think about them again.
Okay, I'll bring some material on that for next week, and we can talk about it at next week's session also. Who knows, could end up with a buttonwood candidate also. And last but not least, Marie Frank sent us a link to stockanalysis.com. And Wendy, my wife, accepts your apology, Marie. Yeah, it turned out to be quite entertaining and quite, if you have not visited there, I'd say take a look and experiment with their screener. It's pretty good. And it just nudges me to also take a look at FinViz, but I was really impressed with stockanalysis.com.
And Marie, we'd like you to send Mark a picture of yourself because we think you belong in this rogues gallery here. So
She does.
send Mark a picture, and we'll make sure to attach it to stock analysis and to some of your other great ideas.
Cool. So let's press on. Here are the 20 companies selected. Like I said, I bought all of these today, so maybe I'll add it to the disclaimer page, but just assume going forward that I own these. And pretty good list from top to bottom. What's your favorites here, Ken?
Well, I really like United Therapeutics. I've liked it for since I first presented it back in March. I really like UFPT. I presented that at the round table. I think it's a wonderful, wonderful company. I own Axos and Technoglass both, and I think they both are deserving of being on the table. I'm very excited about Halozyme, another stock that was up quite a bit this morning in a very, very down market. Halozyme is starting to be advertised, not the name of the company, but the whole process that they're licensing to all kinds of other drug companies. That's turning a lot of heads in the advertising world. There's a lot of them on this list that I'm very familiar with and I like a lot, Mark.
Yeah, we ended up keeping 9 and bringing 11 new names here, and you can see the sources of the ideas. They're pretty widespread and varied. We have discovered that Vanguard VTWG ETF is a pretty good source of ideas. That is the Russell 2000 growth part of the Russell 2000. So it's the types of companies that we generally find quite attractive. The Groundhog has given us some ideas. Some of the stuff has come from other community members and roundtables. And so from top to bottom, we didn't have to violate the sales too much. United Therapeutics is the largest in terms of sales at just over $3 billion, but we did really want to bring in that growth forecast in the mid to low teens, and we did. And with decent return forecasts, and again, we have room for some enterprising speculations, and those show up as the lower quality ratings on the page. But the overall quality, I think, Ken, are you okay over 70?
I'm very pleased that it's over 70, Mark, and I know that we worked kind of hard to move it from the high 50s to move it to over 70 by not being quite so chancy, not relying so much on hope. With a couple companies that we took off the final list. If you're looking at that last one on the list, folks, with no numbers attached to it, that is an exchange-traded fund rather than an individual company. And we exchanged it on the 25 list for NUKZ. I'm sorry, this is the 26 list. We exchanged it for NUKZ, which was on the 25 list, because people were telling us they couldn't trade NUKZ in some of the brokerage houses. Well, we've found out that some of the brokerage houses aren't trading the one on this list either. So I think we're going to ask permission to trade or to change that one from what was listed on the previous slide to this NLR, which appears to be a little bit easier to trade in most brokerage houses.
So this one goes away, and this is replaced by this. I'm pretty sure Betsy Wills will give us permission here. One of the things we like about this one is it's got a real long track record. And frankly, it has the nuclear fuel stuff that she talked about. It has BWX technologies. She just did a presentation on that. And Oklo and NewScale are on here. The nuclear fuel is covered. And then some
It also has Next Gen, Mark, which I think is a real up-and-comer too. Yeah.
So I think it's pretty well established. Just don't spend too much time looking at that forward PE column, because that definitely fits the non-core description, right?
Well, we had a discussion about what the heck does a negative PE mean. I confess I can't put any English to that number. Usually when I'm teaching mathematics, I tell students to try to put the numbers into something you can describe in English, but I can't tell you what a negative PE stands for. So I would rather just have a smiley face in those particular blanks rather than a negative number. But even the positive PEs are kind of outstanding on this list here.
Yeah, and I'm going to brag for Ken because he won't do it himself. He actually owns a chunk of this one. And that's a pretty good number too. And that's part of the reason that number's so high. I mean, they don't have sales or earnings, or they just are breaking into that just now. But Oklo is something else. And he talked me into buying some New Scale about a year ago. And every morning I get up and the first thing I see is New Scale is either -10 or +5 or -5. Every day it's -5 or +5 or +10 or -10. So Ken, you're
yeah,
making my
but
morning.
It worked out to only more than doubling during the year, Mark. So that's not.
I know.
Okay.
I mean,
yeah,
but we're not used to that type of treatment from our holding.
Well, that's why you don't look at it every morning, Mark.
All right, so Betsy, with your permission, the nuclear entry is NLR, and I think it covers your bases pretty well. All right, so with that, let's just quickly go through a discussion. Our favorite books on investing. This kind of came up at one of the Breakfast Club sessions held by the Heart of Illinois. If you go looking for that character, you can find some of the times we have talked about this in the past. In fact, I started off by going back through our YouTube page, looking at all the videos until I found the bull reading the book. And sure enough, that was one way to find it. And by the way, Ken, if you're not getting me the Ferrari, this is still on my Christmas list, my Christmas wish list. That RV down there that has I think it's like a Maserati or something.
Next slide, please.
Next slide.
That's what the Portillo's fund is for, eventually?
Yeah, that's it.
Well, I can get you a hot dog. Okay.
Which means I'm headed for buying a Matchbox version of that picture. And then I said, okay, all right, you can go back and do it visually by looking for the bull by the book, or why not just ask artificial intelligence to go look? I think this is Chat GPT. And sure enough, it went back and said, well, here's where you talked about. Matt did his discussion of big money thinks small, thinking in bets. And then a little further back, we did those other sessions, and it actually also flagged the recent discussion that we had during our campfire discussion. So that can save you a little bit of time. There's the actual session from back in that time frame. And here was this is a really busy slide, but it's the 100 most popular investing books according to Goodreads. I don't know how they do their ratings or actually who does these ratings. I assume it's the Goodreads readers. But pretty busy slide, but a lot of these companies, it's basically a source of ideas for books you might want to read. The first one on the list is this one. And we've talked about this briefly in the past. I don't think we did any type of extensive discussion of it, Ken.
Well, I know we didn't, and I would I have that a note. I'm going to actually buy this and read this one. This is not a book that has come through my radar, at least not to the place where I've become interested in actually reading it. So let's vow that we're going to maybe push this one to a bull session, then maybe to a campfire then.
Could be. So between that one and David Gardner's book, Rule Breaker Investing, we'll take a look at a couple of those.
Yeah. I also would like to nominate Poor Charlie's Almanac. I actually bought that one, Mark, and it's not a bad beginning read. Poor Charlie's Almanac. Yeah.
That's one that I have not read. I've read a lot of these books, but number 3 on the list here. And all we did is went through and circled some that our community members, people that we were discussing these books with over the years, have talked about. Morgan Housel's Psychology of Money, that's not a hardcore investing book, but it's just one of those books that makes Matt Spielman smile. There's a lot of behavioral stuff associated with investing and a a lot of stuff that we do helps. So Matt, I assume you've read that one. Any thoughts on Morgan?
Oh, I love Morgan. I like Morgan. If you're not a big reader, he's a great podcaster because his podcasts tend to be 10 minutes or less. He sort of has this thought and doesn't need to fill 30 minutes or an hour.
Mm-hmm.
And he's still I think he has a new book too, and just popped up on a couple Motley Fool podcasts too as a guest.
He did. Mm-hmm. And then the other books that have appeared near the top of our list are all kind of circled there from left to right. I do think the Motley Fool's got shorted a little bit.
And we're not necessarily circling the most scintillating reads either, Mark, because we have security analysis and the intelligent investor both circled, and those can be used as a soporific if you want. They'll put you right to sleep if you don't watch out. So be very careful with a few of them. We could do a lot worse than zeroing in on one up on Wall Street, though.
Yeah, we talked about
and even turning a lot of what Lynch says into semi-rules, or at least as very strong guidelines for a lot of things that are going on. Yep, still true today, a lot of what he says.
So these were the books that were nominated by our community back last year, and they cover the spectrum from almost indirectly related to investing and perhaps psychology. You can see Morgan Housel's book is right here. That certainly fits that bill. But I think these cover the spectrum. And so I guess I'll ask the question, Ken, if a beginning investor asked you, where would you start? Do you have any favorites that you would encourage a relative newcomer to consider?
Well, it depends on what they want to start talking about. If they want to start investing, I think the 1984 Investor's Manual from Better Investing is a wonderful source of ideas. I really do like One Up on Wall Street. I think that it gives you a philosophy of not being overly aggressive, and at the same time understanding that stock prices fluctuate. If you want to understand the numbers a little bit more, if that tickles your fancy, I have used the accounting game many times in teaching small groups of people about how simple accounting works, not getting so complicated that you get lost in the vocabulary, because that's one of the problems with accountants. They use a very arcane vocabulary to talk about things, and sometimes you become confused by the words. But everybody seems to understand a lemonade stand. There's nobody that I've ever worked with that doesn't understand this simple concept of selling lemonade when you're 9 years old. And you can tie that into just what any company does to make money. So it's a wonderful book. I think that O'Hara's book from Little Acorns is. It's not really teaching you very much about investing, but it certainly is the kind of book that makes you feel good about wanting to learn the lessons that he learned.
Yeah, I think that's a what is possible book.
Yeah, and it's written as an easy read too. So if you're looking for something to begin with that's kind of motivational, O'Hara's book, that's in the bottom row there, third from the right, is a really interesting kind of thing to do. We don't have anything by Kramer on the list here, but I will tell you that Jim Kramer is really a fairly decent writer and a closet investor in the classic sense of the word. Now, he's not above also becoming a carnival barker and all those kind of things, but a lot of what Jim Kramer writes, including his most recent book, has a lot of very important things to say, and it's good, solid, making you understand that a lot of things that you've been listening to are probably true. They're probably the right things to do as an investor. He doesn't get tied up in a lot of arcane things. He doesn't get tied up in technical analysis. He's a good, solid, fundamental investor that believes you need to do your homework.
Thanks for the nudge on that. I'm going to go ahead and put his most recent book, the one that we did almost a campfire style discussion of a couple years ago, and I'll put that in the notes on the forum and add that to this list also. I don't remember the exact name of the book, and I don't have it handy.
It's sitting down in my bookshelf downstairs, and I'll find it for the next thing if you need it. But yeah,
I can remember being a bit stunned at some of the stuff we discovered and ended up discussing. Kim, any thoughts from any personal favorites on here for you, and why they would be, where they would fit into the investing experience? Nope,
Kim might not be with us, Mark.
Might have got to step away. Matt, how about you? Did we lose Matt too?
Matt is he was muted, so there he goes.
Yeah, no, a little family conversation. Alex was admiring the he's a big reader. He's admiring the wall of books. So we got a little sidebar going.
Nice.
You know I love Thinking in Bets, which is about decision making on top of investing. But that's my I'm in my third year of that line of reasoning, which probably has a library about this big and a whole bunch of unread things too.
I'll add Annie also.
I like the Rebel Allocator and the Psychology of Money and the Joys of Compounding, because we want our money to compound.
Yeah, we talked about this during that breakfast club, Kim. I mean, this Joys of Compounding, probably the most nondescript but powerful book for helping to understand how powerful investing can be.
Yeah.
It's a good one.
Probably the snooziest read on the list, Mark, is The Intelligent Investor up there in the upper left corner. But I've read that thing. I read the original the first time, and then I've read the annotated version the next two times, probably 10, 12, even 15 years apart. And each time I go through it, I first of all remark about what a task it is to wade through the prose, but I also come out with understanding things in a completely different way than in a lot of cases than I was understanding it prior to the read. So there's still so much very, very important stuff being said in that, and that's probably the original text on retail investing right there.
Mm-hmm. Good stuff. Yeah, there's a lot of good books in here. Again, they cover the spectrum. Like Ken said, the accounting game is for some people. It's not for everyone. The same thing is true. This investment guide for teens, written by Selena Marangian, a friend of ours, that for some people, that's the exact type of presentation that is needed to ease into investing. So some pretty good books on here. And
our audience is pointing out, Mark, the Beardstown ladies book also.
Oh man, I got to add that one too. This is going to be quite a library. Beardstown Ladies. All right, I'm going to dispense with talking about how I was almost an honorary Beardstown lady, and we'll move on.
Yes, keep going.
All right, really quick, because we're coming up on the witching hour. Just checking in real quick on the utility bill auto pay demonstration that we've got going on. And in a nutshell, for those of you that aren't familiar with this, we basically are demonstrating that you can take a handful of dividend yielding investments and generate enough income to pay the utility bill. And the short story is we basically started this about 4 years ago with approximately $45,000 invested in 5 utilities. And you can see that that $45,000 has now grown to be almost $58,000. And we have paid every utility bill every month since May 20, I think it was May 2021. Yeah, these are original investments down here. So these are charter holdings down at the top here. So since May 2021, we've paid every utility bill. You can see that we just made a payment on November 1st. And then the ledger, of course, demonstrates the flow of dividends from the utility stocks. And then we've got those two enhanced yield vehicles, the JP Morgan Equity Premium Income and the Round Hill. That one's really kind of we're using it as a learning opportunity. The theory here, and we won't be surprised if it actually loses value over time, loss of capital, but it is kicking off a spectacular dividend, and they come weekly. And you can see the flow. They are variable. It all depends on how well the people who run those two exchange-traded funds do their jobs in the stock market and with their options, generally covered calls, but other types of stuff. And I don't know. I'm pretty happy with it. Ken, what do you think?
Well, the only question I have, Mark, is at any time, I know that's a checkbook where the blue arrow is.
Mm-hmm.
So do we ever harvest any of the cash from the checkbook and invest it in something that's going to grow?
Yeah, I think so. I think what we will do over the next month or so is we'll take a look at the budgeted tax bill, because we do pay the taxes too.
Right.
Take a look at that and see what type of balances, because everything above that arrow is actual. Everything below the arrow is budget. So we can actually look at the next year, making assumptions about these variable payments and the utility payments and kind of map this out. And yeah, Ken, I think, taking $1,600, $2,000 off the table and putting it into one of these other vehicles makes a lot of sense.
We're getting some comments about the size of the utility payment. I'm happy to say that utility bills in the state of Michigan are not like utility bills in some other states throughout the country. And this is a Michigan simulation that we're doing right now. And probably a very reasonable utility payment.
Yeah, we basically look at the national index of the average utility bill. So we adjust it once a year, and we deploy the payment plan made famous by many utilities, where you take the expected payments and divide by 12. That's all we're doing there, just to keep it simple. So good, clean fun.
Mark, we're getting a question from Cheryl. She wants to know, why is there a Pfizer dividend for 12.2? And I'm trying to go on, talk about it. I'm
going to have to see if we qualify for that. We sold our Pfizer. So I'm going to have to look and see. That one might actually disappear.
Okay.
Depends if we held it long enough to qualify for that dividend payment. I hadn't thought about it until she just reminded me.
Nice catch, Cheryl.
All right. So pressing on. Here is our recent roundtables special edition on best small companies, which is up, and it's already got almost 200 views, Ken. That's nice. That's from just Saturday. And all of our former bull sessions, we archive all of this stuff. And as you look back through these cover slides, you see a bunch of rabbits. The furfluffles definitely out there. The individual sessions. This was a particularly good discussion before the roundtable. That was one of our book reviews. And obviously, we were hunting in some pretty interesting places over the last several months, coming up with that list of best small companies. All right. So with that, we will be tackling Buttonwood next week. I'm also in the middle of preparing a session on Love American Style, Investment Club style. So your questions are very welcome. You could end up in questions that will reach the floor of the National Convention when I put my presentation together. And yes, Ken, that is a beaver moon on the far right.
I want to remind folks that Mid-Michigan is going to be running what we're going to call a jamboree in late January, where we're going to be soliciting portfolios from clubs throughout our own chapter, but also throughout the entire nation. We'll even be looking at individual portfolios, provided they have a limited number of stocks in them. We don't want to look at a 90 stock portfolio, but anything probably under 20 would be considered great. And if you think you might want to submit something, we're not going to be doing specific kind of advice, but rather we'll be talking about how you can set some short-term and long-term goals for the portfolio and what might be appropriate depending on what the portfolio looks like. We're going to call it Jamboree, and if you need more information, watch for stuff coming out from the Mid-Michigan chapter in the email. I hope most of you are already on our guest list and you'll be receiving our emails, or go to the Mid-Michigan website on the homepage, or drop me an email myself and I'll give you information on how you can submit a portfolio. We'll see if we end up with 4 or if we end up with 400. I'm not quite sure how this is going to work out, Mark. Okay, but
we'll see.
You don't learn anything by not trying. So
that's true, and I mean this grew out of our experience. There've been a couple of times when Ken and I would actually be on the road and would, you know, be in a place where we would have a couple investment clubs meeting in the same place, and it was just wonderful how the discussion evolved into you know, what can we learn from this? How can we help each other? And the Jamboree concept, I think, is fantastic going forward for bolstering our efforts to do better portfolio management.
Mark, our friend Robin from Arizona says that she recently saw a Notebook LM instructional presentation. She thinks it was from Bakul from California.
Mm-hmm.
Does anybody out there know where they can find that presentation, or do you know where you can find that presentation, Mark?
I can.
Yeah, I know where you go to the Better Investing website and you go to the Golden West chapter.
Okay, Robin, Better Investing website, Golden West chapter. And she says, thanks. Our audience really can give answers to a lot of questions. You just got to ask them.
And Robin, if necessary, just go up over the mountains and across the desert and go hunt Bakul down on the Pacific coast. Could be a fun trip. Good stuff. Anything else in the hopper, Ken?
Nothing that I know of, Mark, except that we'll be on again at 2 o'clock next week, and we'll be playing around with Buttonwood a little bit next week.
All right, so with that, everybody have a great time. Hopefully the market will calm down. Take advantage of opportunities where you discover them. We thank you for taking the time to be here with us. Thanks so much, Ken. Thanks so much, Kim. And thanks so much, Matt. You guys are really appreciated. Everybody out there, take care.
Good afternoon, everybody.
Bye-bye, everyone.